Welcome to Safe Money Strategies with Susan Moore-Vault, president of Moore Financial Strategies. Susan specializes in working with those over the age of 50 and is now in her 20th year as a financial services professional in Tucson. None of Susan's clients has ever lost a dime in this market. Susan is an Air Force veteran, a former detective, a mother, and a grandmother. Susan's mantra is get educated about your options so you can make informed decisions. And now, here's your host, Susan Moore-Vault.
Protecting all you have. More financial strategies.
Good morning, Tucson. This is Susan Moore-Vault. As always, thank you so much for spending time with me this early Saturday morning. How are you? I hope you had a nice holiday last weekend and had the time to spend with family and friends and remembering what a joyous day Easter was and is to us. At any rate, my mantra is get educated on your options so you can make informed decisions. So what makes me different from virtually all the other advisors that are out there? Well, I'm a retirement specialist. I work exclusively with pre- and post-retirees with an emphasis on ensuring precious retirement dollars against loss. There are so many things that we can't control. I say, let's work on the things that we can control. Don't you agree? It leads to a whole lot less stress. You know, my claim to fame is that not one of my clients has lost a penny to the market in 2 decades. Yeah, that's over 20 years. I specialize in preserving and growing wealth without risk. Your retirement money is not about accumulation or product. It's about creating income for your future. And if you qualify, tax-free income. The market will continue to rise and fall, ladies and gentlemen. Do you have a plan in place this time to keep your gains, or will you give them back the next time the market falls? Today, the market is where it was 11 years ago. Will you have the money you need for a secure future? The information I have is powerful. Meet with me. It won't cost you anything, and it can make all the difference in your future. Call me at 296-4464. That's 296-4464. Let's face it, if I wasn't telling the truth, there would be complaints. Feel free to call the Better Business Bureau and check me out. I have an A+ accredited rating. I've never had any complaints, and I knock wood, and I thank God, because I really work hard to do a good job for my clients. Our prime directive is to always keep your money safe and always keep your money growing. And the way we do that is by replacing market volatility and uncertainty with insured guarantees to make sure that your money will be there. Isn't it time? If you've been in the market, you must be tired of watching what's going on. You must be tired of trying to decide what to do. I mean, I can't tell you how many people have come in to me and said, oh, I wish I had done this such a long time ago, Susan. I wish I'd met you a long time ago. I wish I'd reacted to your message a long time ago. But I tell them, well, at least you're here now. That's the important thing. And that's what I would say to you, ladies and gentlemen. Please consider looking at your options to see if there isn't a better way to go. Doesn't it just make sense? Let me ask you this. In the last review with your current advisor, did he or she disclose to you all the fees that you're paying? Most managed accounts have fees anywhere from 1 to 1.25% to 1.5%. And that's money that's out the window. And if that management fee includes mutual funds, well, there are a whole bunch of buried fees inside mutual funds. And if you don't believe me, go to www.personalfund.com. That's PERSONALFUND, personalfund.com, and put in a few of your mutual funds and find out how much you're paying. I think you will be shocked and surprised to see all the hidden fees that are not being disclosed to you. Well, you add that on top of management fees, And on top of all the risk that you're taking, because the management fee still gets paid, whether you make money or whether you lose money. And ask yourself, does that really make sense? Is that really the best way to go? Is there another way to go? And ladies and gentlemen, I'm the person that can show you that alternative route, whether it's just rolling over a 401k or an existing IRA or a 403b plan or a deferred comp plan or a 457 plan, any type of qualified plan. We can roll it over into an annuity that will give you guaranteed safety, guaranteed growth, and guaranteed lifetime income. And oh, by the way, how about a 10% bonus up front just to sweeten the deal? Yes, 10%. So if you put in $100,000, you're going to have $110,000 the first day without any fears of that money ever going down. And that's the beauty of the types of plans that we have. They allow you to be passively linked to the market so you can still have your toes in the water, so to speak, and be linked to the Dow or the S&P or any number of indices, but you're not in the market. It's just a passive link. And if the market goes up, you participate in the gains. If the market goes down, you don't lose anything. You just stay where you are, or you can be in a fixed account. And the fixed accounts are doing a whole lot better than any CD you'll find anywhere. Well, we're up against our first break, but we'll be right back. If you do have a question, please call me now at 296-4464. That's 296-4464. Don't go away. We'll be right back.
More financial strategies.
Thanks for listening to Safe Money Strategies with Susan Moore Vault. Now, do you have money sitting in CDs or a money market and it's doing nothing? You can put it to work while still having access to 100% of your funds. And you can increase your income by $3,000 to $6,000 a month if you should need long-term care assistance while making no financial commitment. For a free report, call 520-296-4464. Now, you must be in average to good health to qualify. For this free report, call 520-296-4464. That's 520-296-4464. Call Susan Moore Vault today.
Hi, it's Glenn Beck for Susan Moore Vault of Moore Financial Strategies. Since her days serving in the Air Force and as a detective, Susan Moore has built a reputation on integrity, honor, and service. For the last 20 years, she has been conservatively managing assets, and get this, not one of her clients has ever lost one dime. For lifetime income programs, wealth transfer, long-term care planning, IRA, 401k, rollovers, and more, let Susan give you a free financial review. Call 296-4464. That's 296-4464.
More financial strategies.
Well, we're back, folks. I went through my pile here and found a couple of interesting articles I wanted to share with you. Experts are saying that a correction is probably here now. If it isn't here right now, it's about to be here. Mike Larson, who is with Money and Markets, somebody I really read a lot. He's got a lot of wisdom. He said the latest figures make one thing abundantly clear to me. Europe is mired in recession. Asia is slowing as well. And despite the building size and strength of this global showdown wave, the U.S. has so far remained afloat. But is the game almost up? Is that slowdown wave about to wash up on our shores? That's what I'm expecting, and I find it hard to believe stocks can continue to power ahead if that's the case. European recession deepening as jobless surges. Pigs sink deeper into slop. The pigs are Portugal, Ireland, Greece, Spain. For all of Europe, central bank's monetary largesse, the real economy over there sure is struggling. In the fourth quarter of 2011, the collective economy of the 17-nation Euro region shrank 0.3%. That was the first time the economy contracted since 2009. And so far in 2012, things haven't gotten any better. They've gotten worse. A European economic confidence gauge dropped 94.4% in March from 94.5 in February, compared with expectations for a rise. An index of European manufacturing activity slumped for the 8th month in a row. Unemployment, for its part, rose to 10.8% in February. That's the highest since 1997. The Irish retail fell 1.9% from a year earlier in their most recent period, the largest decline since last fall, and Greek bank deposits are plunging at their fastest rate in 11 years as citizens yank money out of institutions they worry will fail. Portugal just warned the economy will shrink by 3.4% this year, more than double the rate of contraction in 2011, and Spain is expecting a 1.7% decline in its economy this year, with a total debt track to rise to 79.8% of the GDP. That would be up from 68.5% in 2011, the highest since the country became a democracy in 1978. Warning signs are popping up elsewhere too. It all brings me back to the U.S. He talked about construction tanked 1.1% in February, the biggest drop in 7 months, and on and on. It's a long article, but he says the massive money printing rally is running out of steam and the global slowdown wave is washing up on our shores. So I've been taking some gains off the table, and I recommend you too. If I'm right, and the U.S. is set to slow further like the rest of the world already is, earnings and stock prices could suffer. So that was from Mike Larson. Then I was reading The Buy and Hold is Here and Gone by Michael Hamm. This was kind of interesting. The classic and traditional investment strategy of buy and hold, invest in assets and then never sell them, is losing its relevance, or at least it seems to be with baby boomers and seniors. This is especially true since the once hallowed and honored area of equities, also known as stocks. For many decades, it seemed that regardless of the individual corporation, prices would always go back up. For some time now, Wall Street pros have been eschewing the buy and hold approach, and finally, both baby boomers and their parents are throwing in the towel on waiting for their stocks and other investments to go back up. And a long wait it has been, thus far almost 12 years, or over 12 years since 2000 and the heyday of the Y2K stock market and real estate bubble. A powerful financial pundit states that by being fully invested in the stock market on the best 100 days since the beginning of 2000, an investor would have earned 376.4%. I'm going to read that again. A powerful financial pundit states that by being fully invested in the stock market on the best 100 days since the beginning of 2000, an investor would have earned 376.4%. Those are impressive returns. But here's the other side of the story. New data suggests that by avoiding the worst 100 days, an investor would also have now lost 376%. In other words, the best days and the worst days are mirror images of each other. Consequently, being fully invested for nearly 12 years has yielded nil. It is bear markets, such as our current one, when substantially higher volatility occurs. What then are you to do to protect and hopefully grow your money? Insure your investments with products that are ideally structured for these volatile times. The worst case scenario is you wouldn't make anything if you're linked to the market and it went down, but you wouldn't lose anything either. Don't delay your quest for financial security. Get educated on your options so you can make informed decisions. And that's what I'm here for, ladies and gentlemen, to help you become aware of other strategies for your safety and your security and your lifetime. And the best part is I don't charge anything. Such a deal. I'm free. So give me a call. Come on in and see me at 296-4464. Also, I read an article in Yahoo Finance. This is interesting. It's by Bloomberg. Most and least taxing states